Gold versus Bitcoin. Which one should you own? That's what we're going to be covering in this video. And I wanted to start off the video with a chart of gold, a long-term chart of gold, just to grab your attention from the start. Gold does have massive potential for price appreciation during its bull markets. So it is a question worth asking. Should you own gold or should you be investing in Bitcoin? So without further ado, let's get right into it. Both gold and Bitcoin fall into the category of storeholds of wealth. And so we've been strong advocates for both gold and Bitcoin because of their characteristic of a storehold of wealth. So that's what we're going to start off the video with, talking about why this is such an important concept in today's financial conditions. Then we're going to talk about gold specifically. Then, of course, Bitcoin. And at the end of the video, we're going to decide which one you should own in 2021. So why are we bullish on storeholds of wealth? And the simple answer is interest rates and money supply. So we're going to quickly talk about that before diving into the details of gold and Bitcoin. And this is a concept that we've talked about before on this channel. It's the difference between high interest rate environment and a low interest rate environment, which is what we're currently in right now. When you've got high interest rates, it means it's very attractive to save your money in the bank. So you've got a tremendous amount of people that save their money in a high interest rate environment. And so that slows things down in the economy. But what that means is that there's absolutely massive potential for growth by lowering the rates. Because when you lower rates, people start to save less and they begin to borrow more money and spend more. So this is when you want to be investing in the stock market, when there's massive potential for growth, because you've got all that potential energy stored up in the interest rates. Now, when rates are lower, you've got the exact opposite scenario. This is where people are borrowing massive amounts of money, and that's something that we know is currently occurring, and there isn't much space to lower interest rates anymore. We don't have much potential for growth. And so what you're left with is a massive amount of debt and a government that's currently trying to inflate away the debt, right? We've got trillions of dollars in stimulus, Federal Reserve expanding their balance sheet. They are trying to devalue the dollar to inflate away the debt so it's easier to pay it back, right? That's the plan, and that's the only way to prevent a deflation from occurring like 1929. When you've got a lot of debt, it wants to deleverage, and you're either going to do it through inflation or deflation. And so that's the moment where you have to bet on value, not on growth, on value. And you can do that through the stock market by buying value stocks or by buying assets like gold and Bitcoin. And that's what we recommend to our members on gameoftrades.net, to have a significant part of their long-term portfolio invested in value. So now we've established that storeholds of wealth are likely to be a great investment for the next decade. Now, if you're so far enjoying this video, make sure to drop a like. This video did take quite a long time to prepare. So if you enjoy this type of content, make sure to let us know. And also don't hesitate to subscribe if you enjoy this type of content. So now we can take a look at the bullish case for gold. So this is the chart that we love referring to when taking a look at gold price appreciation. It's not up to date. It's back to 2015, but it's one of the cleanest charts to observe. And it shows you the correlation between gold and the M2 money supply, which, by the way, does not look like this anymore. It looks parabolic because of the health crisis. So you can see the bull markets in gold form around the money supply. It catches up to the money supply. And gold actually forms its bull markets in perfect correlation to the money supply over time. Not inflation, right? Inflation is affected by things like technology, globalization. You can see this run up here between 2000 and 2011 was made during a period of time with very low inflation. You had the 2008 crisis, you had the dot-com bubble throughout that time. So you can have gold rise in a low inflation environment as long as the money supply is going up. And we know that that is the case. Now let's take a look at the bullish case for Bitcoin. And to summarize it in one sentence, it is the rise of the digital gold asset class. We're going to first take a look at the characteristics of money of Bitcoin compared to gold, and then we're going to take a look at the actual technical aspects, the growth potential of Bitcoin over the next year, over the long term, and decide which one is the better option. So these are the characteristics of money, and you can see Bitcoin is a very good form of money. Even better, we're not going to go through each of these, but I want to focus on 2 points in particular: the portability of Bitcoin and the established history of Bitcoin. You can see this is the area where we have the most difference between Bitcoin and gold. Now, this is the biggest advantage to Bitcoin. It's the ability of Bitcoin to transfer value from one person to another at a great distance at a very, very fast rate. This is the first time in history where you can do that without an intermediary. This is why Bitcoin has so much value. This is why Bitcoin has so much potential as a future form of money. Now, the biggest drawback to Bitcoin is the established history, or actually the lack of established history on Bitcoin. It started in 2009. We only have a decade of track record, and that makes Bitcoin a less predictable asset class than gold. Gold, we have thousands of years of history where we know how price behaves in different environments: deflation, inflation, prosperity, crisis, you name it. Gold has stood the test of time. So that's where the difference is on Bitcoin. We're going to come back to that in just a second, but we're first going to take a look at the growth potential for Bitcoin. So this is the stock to flow model. If you know Bitcoin, if you've done your research, you'll know exactly what this is. It's based off the halving cycle. Every 4 years, you've got a massive supply shock, and that's what triggers the stock to flow model to rise every 4 years, like you see on this chart. And you can see the bull markets form around that halving cycle. So you can see just from a technical aspect, if we continue seeing the supply shock every 4 years, and we continue seeing rising demand from institutions, maybe even governments will be using Bitcoin one day when we start to have a true US dollar crisis. If these trends continue, we could be seeing $1 million Bitcoin this decade. Now, obviously, that won't be a straight line up. We will have ups and downs along the way. We don't think we're going to be heading for a massive super cycle like some investors are suggesting right now. We will have a speculative mania and then trigger a bear market, and this is where we're going to be re-entering the Bitcoin market in around 2023. So now, should you own gold or Bitcoin? And we're going to split it into 2 different lists. First of all, short term, and then the long term aspect. So in the short term, Bitcoin's track record will remain a problem. Large capital, large financial institutions, governments will continue allocating to gold because of its track record and its predictability. In the short term, volatility will also be a problem for Bitcoin. Large capital does not enjoy, they do not want high volatility. In the current cycle, Bitcoin remains too volatile for large institutions, both in terms of the day-to-day volatility. Bitcoin can go up and down 10-15% in one day, but also in the year-to-year volatility. Although Bitcoin does generally rise, you can have 80% drops during the bear market, and that is not necessarily something that large institutions want to allocate a significant part into. They do not want to risk this type of scenario from occurring with a significant part of their capital. So we expect that in 2022, when Bitcoin will be in its bear market, we will see the price of gold rise massively, especially with all the retail investors that join the trade and understand the debasement of currency that's currently occurring. You're going to see a lot of investors book their profit from Bitcoin to gold, and that's going to create some big moves up in gold that will still be well within its bull market cycle. Now let's take a look at the long-term aspects. Bitcoin will likely build credibility, right? We're going to see more regulations, less fraud, more taxes, and that is going to increase the trust in Bitcoin from financial institutions, from large capital. The volatility will also diminish as Bitcoin's market cap expands and starts to get closer to gold's market cap. you are going to see that day-to-day and year-to-year volatility go down. And that's going to be very attractive for investors looking for a storehold of wealth. Now, the last point is a potential Bitcoin standard. If we have a massive dollar crisis and Bitcoin is already at a larger market cap than gold, perhaps government will consider a Bitcoin standard, similar to how we had a gold standard before our fiat currency system. So our current plan at gameoftrades.net, what we're talking about with our members is a heavier allocation of Bitcoin to gold throughout the current bull market in 2021. And then our exit will be a switch to gold and silver to ride the rest of the gold and silver bull markets. So that's about all I wanted to cover in this video. I hope you guys enjoyed. If you did, make sure to drop a like and subscribe to this channel if you haven't already. In the meantime, good luck on your trading and see you next time. Now, if you're so far enjoying this video, make sure to drop a like. This video did take quite a long time to prepare, so if you enjoy this type of content, make sure to let us know. And also don't hesitate to subscribe if you enjoy this type of content.
So, you want to invest in the cryptocurrency market, but you don't know where to start? Welcome to the co-vesting module on Prime XBT. The co-vesting module helps investors and talented cryptocurrency traders find each other. With an easy-to-use interface, you can compare and replicate successful strategies with a proven track record. You can follow multiple trading strategies to diversify your risk. Co-vesting module on Prime XBT. They trade, you profit.